Today, how to analyze the forex market. How to analyze the forex market. The first thing you're going to do if you want to analyze the forex market is to know the direction of the trend. And how do you do that? You go to the higher time frame. You can start from the weekly time frame. You can start from the daily time frame. But for me, when I want to start my analysis, I start my analysis from the daily time frame or the monthly time frame. So the next thing I'm gonna do, this is the weekly time frame. Now when you're in the weekly time frame, you mark out your key levels. Key levels. What are key levels? Key levels are your higher time frame support and resistance level, or where the market gets to and starts reversing. You get it? For example, this is XAUUSD, that's gold versus the US dollar. So you want to mark the key levels. You first of all you change your chart from candlestick chart to the line chart. So the next thing I'm going to do, you bring out your trend line. Then you mark, this is a key level, this is a support level. You draw it to the future. Then next I'm going to do, make sure you get it. Another key level I'm going to draw. So when I'm drawing this level, I'm drawing the previous high and the previous low. This in this place now, this is a previous low to me. Here can also be a previous high, here can also be a previous high. It all depends on you. So I will also mark this place as the previous high. I'll mark this place, that's the previous resistance level. So you drag it to the future. You can also drag it to the back. When you observe something, that this place that we are now, this recent resistance level in the highest time frame, price have tested that place before. Here is the resistance level. Price broke this resistance level. It came back and retested this resistance level again and went up. It came back, break this resistance level, and this place becomes support. Market retest that resistance level and started falling down. That's to tell you that key levels matters a lot. So next thing I'm going to do now is to change my chart from line chart to candlestick chart. Do you get it? Are you seeing it? So this is my recent high. This is my what? Recent low. So then I will now go to my daily time frame. I can also mark this place, but let's just leave it that way. I'll go to the daily time frame. When I get to the daily time frame, don't forget that the first thing we are working on is to know the directional bias, because you must know the direction means trend. You must know we have three types of trend. We have uptrend, downtrend, and sideways trend. So we need to know the direction of the trend. For example, now we started marking our key levels from this place. You can see that from this place, this is a low. The price was going up, right? It broke this resistance level and still going up. Now the price came down and went up again, and the price came down again. The price now is testing this previous low in the daily time frame. That's to tell you now that this market that you have been seeing, this gold market, has been doing what? The direction has been what? Bearish. It has been coming down. Now it has got to a key level. So you will not start trading from this place. You have to wait for a confirmation candle to know if you are going to buy or if you are going to sell more. Do you get it? For example, now the market is testing this recent low. Now, because of that, it's consolidating a little. Do you get it? If the market is going sideways, let's go to the 4 hours time frame. Or before we go to the 4 hours time frame, change this chart to line chart again. Then drag it down to this place. This is the recent low. Now this is another higher recent resistance level. This is another resistance level. This is another resistance level. You get it? So this is another resistance. The previous one we marked before. But let's mark another one. So we are marking this one. This previous we're marking this one. So let's change it to candlestick. Let's go to 4 hour time frame. This is the 4 hour time frame. Now this is 4 hour time frame. In this 4 hour time frame, you can see that this market has been selling down. Now, if the market is exhausting here in this place, so you wait for this candle to give you what we call a confirmation candle before you can enter this trade. But for me, I will not enter the trade now. But I've already established my directional bias. My directional bias from the daily time frame tells me that this market have what be selling. So the market is trying to establish another trend direction. So what is going to happen? We either wait for this market to break this what to tap this support level and start going up, or break this support level and start coming down. Do you get it? That's how to trade. Very simple. Now you can see now that this candle does not tap this line. The reason is because there is another this support level that this price broke. Okay, let's change it. Let's go to 9 charts. I believe you are understanding me. This is the previous support level. Just mark it. You see now that price came to this previous support level and went up. It came down and break it and retest it. Now it's coming down. Do you get it? It's coming down. Let's change it to candlestick. So for me, I will focus on these two places. I will either wait for this candle to break this place before I enter sell. If it break this line and give me a confirmation candle, which I will teach you in the next part. If you break this line, I will start selling. But if you did not break this line, tap this line, this support level is a key level, and start going up, I will start buying. So let's go to 4 hours time frame. We have already know the direction of the market. So with this now, because there is no confirmation, I will not just enter the trade. I will wait until I see my confirmations. So now I've known that, okay, the market is consolidating a little bit. Do you get it? Though the consolidating is not that shabby, but when you watch it from the higher time frame, you see that it's consolidating. So from here now, see, so I'm waiting for this. Look at, there was a consolidation here. So the market tapped into this place. It was coming down. Why is the market coming down here now? It's because of this resistance level that is here. Do you get it? Call this resistance level. Mind you, let's mark this place. The market have breaks this what will I call it now? This support level. So you just mark it. This is support level. So mark it. So this is a break of structure. So in SMC or ICT, they call it uh, break of structure, and some people call it also in ICT and SMC they also call it uh, what is it called? I've forgotten it. I've forgotten the name. Forgotten the name. So if I remember, I will say it. So you see now, after the break of structure, the market tap into it and started selling. Don't forget, when the market comes to this place, you watch either you're going to buy or you're going to sell. But from this place now, as me, I want to take this trade. I will not enter this trade again because this is a confirmation candle for me. It's called Doji candle. So as me, I want to enter this trade, I would have just wait for this Doji candle. I will enter short position here. From this, after this Doji candle, the next candle, I will just enter short position here. After this Doji candle, this full Doji candle, I will just enter short position here. So I'll make sure my stop loss should be here. My stop loss should be here. Oh, so sorry about that. Stop loss should be here. Is 1 to 2. My take profit should be here. You get it. Or here. This recent low. You get it. As simple as that. Trading is not complicated. There are other ways to also know the direction of a trend. You can use trend line to know. With this one we did today now is using key levels to know the direction of the market. So as simple, very simple as that. I believe you understand. So I think for today, that's all for now.